In this video, I'm going to go over how you can earn $3 million tax-free in your lifetime. According to recent statistics that I pulled, Americans move on an average 11.7 times in their lifetime. This is about every 5 years. Now, I don't like moving personally. It's a pain, but if you're going to do it, wouldn't it be great if you had a nice tax benefit to go along with it? Well, the IRS allows you to exclude up to $250,000 of gain from selling a personal residence if you're a single taxpayer, and up to $500,000 if you are married and filed jointly with your spouse. So what this means is, if you move and you have gain and it's less than those amounts, you don't have to pay tax. Gain is the difference between what you sell the property for and what you paid for it, plus any type of purchase or selling costs that are involved in it. And if you did any improvements, that could potentially add on to your tax basis. In other words, reduce the amount of gain. To qualify for this, there's really two main things that matter. The first is you must own and live in the house for at least 2 out of the last 5 years. It doesn't necessarily have to be consecutive time period, although if it's not your principal residence during the entire time that you owned it, then you may have to reduce the amount that you are able to exclude. But most Americans are purchasing a house, living in it for that entire time, and then moving out, selling it, buying something else. So if you're doing that, you're probably going to qualify. The other important thing is that you can only take advantage of this once every 2 years. In other words, if you excluded gain within the last 2 years on the sale of a principal residence, you have to wait to do it until you've reached over a 2-year time period. Since the average American only moves once every 5 years, that's probably not too difficult to accomplish most of the time. So I actually had a client that did this somewhat unintentionally because they had a successful business, and so they would buy a home, they'd live there for 2-3 years, and then they wanted to upgrade to another home as the value increased. Their business was doing well, so they moved out, moved into another home, sold it, excluded a substantial part of the gain. They were in California, so getting a $250,000 exclusion when you're buying, a $2-3 million house wasn't really, and wasn't an absurd amount of appreciation. We're only talking, somewhere between 8 and 12% a year on appreciation to get to that exclusion amount. So they excluded that and kept continuing to upgrade. And so they had a substantial amount of tax-free income. Now, if you do the math on this, if you're a single taxpayer, round up 11.7 to 12 times in your lifetime. So you move 12 times and you maximize the $250,000 exclusion. Well, that's $3 million for just a single taxpayer. Now, of course, you can double that if you're married filing joint, because now you can exclude up to $500,000 every time. And that's just moving once every 5 years. If you move more than that for whatever reason and maximize it, obviously it can be a much larger amount. So that's a relatively easy way to get $3 million tax-free from just having a home that you live in.